Welcome to Talk Tickers, your essential shortcut to understanding the pulse of the market. We sift through the earnings call noise to bring you the insights that, well, really matter.
And today, we're diving into Okta.
That's right, the identity security powerhouse. They just dropped their Q2 fiscal year 2026 results.
And it was quite a quarter, not just good numbers, but some strategic moves that feel pretty significant, especially, with everything happening around AI security.
Absolutely.
Yeah.
The market definitely noticed. We saw the stock move up nicely in after-hours trading.
Yeah, a strong beat across the board. It really signals, I think, renewed confidence from investors. Yeah. Feels like Okta's hitting its stride again.
Okay, so let's get into the hard numbers first, because they do paint a pretty clear picture. Okta delivered a genuinely strong Q2. They beat analyst expectations quite handily. Mm-hmm. Non-GAAP EPS came in at 91 cents. The consensus was looking for 84 cents. It's a nice beat there.
Decent margin.
Yeah. Mm-hmm. And revenue hit $728 million, which topped the $711.8 million estimate. That's, 13% year-over-year growth?
Pretty robust. These aren't just squeaking by the estimates. They're solid beats. Shows some real underlying health in the business, which clearly, investors liked.
Right. It's not just meeting, it's meaningfully exceeding. And beyond those headline figures, the profitability and cash flow look good too.
They did. Okta hit a strong non-GAAP operating margin, 28%. And they generated $162 million in free cash flow. That's a 22% margin.
Solid. So the growth isn't happening at the expense of efficiency.
Exactly. And they're sitting on a comfortable pile of cash too, right? About $2.858 billion in cash and short-term investments. Gives them flexibility.
Okay, so those are the headlines. Pretty positive. Let's maybe dig a bit deeper into the financials and what's really driving this momentum.
Sounds good.
So looking at the details for Q2, subscription revenue, that's the core for a company like Okta, grew 12% year over year. That's $711 million. Nice, predictable stream.
And crucially, the future outlook based on commitments looks strong too. Remaining performance obligations, RPO, think of that as contracted future revenue.
Right, a backlog.
Exactly. That surged 18% year over year to $4.152 billion. That's a big number.
It is. And the near-term view.
Also good. Current RPO, or CRPO, that's the revenue expected in the next 12 months, that grew a healthy 13% to $2.265 billion.
So this isn't just about Q2 performance. It's showing sustained demand, a healthy pipeline looking forward.
That's the key takeaway, I think. Strong indicator.
And building on that, Okta actually raised their full-year guidance for fiscal 26.
They did. They're now targeting 10% to 11% total revenue growth for the year. That's roughly $2.875 to $2.885 billion.
And profitability expectations are up too.
Yeah, non-GAAP operating margin projected at 25-26%, and non-GAAP EPS raised to $3.33 from $3.38.
Okay. And for Q3 specifically?
They're looking at 9-10% revenue growth and 10% CRPO growth. So continued steady growth expected.
This revised outlook, it feels like more than just a minor tweak, right?
Yeah.
It suggests real confidence from management.
Absolutely. And they actually said that. Management highlighted they removed some previous conservatism they had baked into the outlook.
Oh, interesting.
About macro uncertainties and how the federal vertical might perform. Apparently, those headwinds just didn't really materialize in Q2 like they thought they might.
So it's not just adjusting numbers. It's a strategic signal of confidence in their execution and maybe the overall market environment.
I think so. We also saw their net retention rate, NRR, stabilize at 106%. Management basically said expect it to stay around that level, plus or minus a bit, for the rest of the year. Healthy enough.
Good sign for keeping existing customers happy and spending.
Right. Oh, and one final financial point for investors listening. There's about $510 million of 2025 convertible notes maturing next week. They'll be settled in cash. Something to be aware of on the balance sheet side.
Got it. Okay, so financials paint a picture of health and growing confidence. But the long-term story, especially in tech, often hinges on strategy and innovation.
Always.
So what's Okta doing beyond the numbers?
Well, this is where it gets really interesting, I think. They announced they're acquiring Axiom Security.
Yeah, Axiom. They're a modern privileged access management vendor. PM, right. And this feels like more than just adding a feature. It seems like Okta is making a bigger play for that critical, often overlooked area of security privileged access. Who gets the keys to the kingdom?
Exactly. And it's not just about human users with privilege. This Axiom deal feels like an urgent move to really own the non-human identity space.
Like service accounts, API keys.
Precisely. Securing databases, Kubernetes clusters, all that critical infrastructure. Yeah. And managing the identities of machines and applications themselves. This is becoming a huge battleground, especially as AI agents start doing more within enterprise systems.
Makes sense. So even though they called the deal immaterial to guidance for now.
Right. Financially small, perhaps, but strategically significant, it signals a much bigger ambition. Okta is really pushing this identity security fabric narrative now.
The fabric idea,
Yeah.
meaning one unified platform for all identity types.
Yeah. Employees, customers, partners, machines, and now, crucially, those AI agents. It's like they want to be the central control tower for every digital access point.
Okay, and a big piece of enabling that vision is their product innovation, specifically this thing called cross-app access.
Yeah, that caught my eye too. It's a new open standard, actually, an extension to OAuth, and it's designed specifically to control what AI agents can access.
So it's like building the rules of the road for AI agents interacting with different apps and providing visibility into that.
Kind of like a universal passport control for AI agents.
Yeah.
Deciding who gets to go where and what they can do. And apparently they've been working on this for 3 years.
Oh, wow, 3 years.
And it's already getting interest from big partners, ISVs like AWS, Box, Zoom. That really underscores this idea of identity being the critical control plane for AI interactions.
Okay, that's a compelling vision.
Yeah.
But how do they plan to actually make money from securing AI agents?
Good question. The plan seems to be leveraging existing products, specifically Okta Privilege Access, OPA, and their Identity Security Posture Management, ISPM product.
So applying those tools to non-human identities and service accounts, which would include AI agents.
Exactly. Their bet is that as AI agents become everywhere, the need to manage and secure them within a robust identity system becomes incredibly valuable. It could open up entirely new revenue streams.
So the proliferation of AI actually makes the identity market bigger and more critical for Okta.
That seems to be the thesis. And it makes sense, right?
It does. Now, while that AI strategy is forward-looking, they're also seeing results from their current newer products, too.
Yeah, things like Okta Identity Governance, OIG, OPA, ISPM, Identity Threat Protection. These are all contributing strongly to growth.
They shared an interesting example, didn't they? A healthcare billing company.
Right. Consolidating 50 different identity vendors onto Okta's single platform.
50. Just imagine the complexity they were dealing with before. That's a powerful consolidation story.
It really illustrates the value prop of having that unified platform. Reduce complexity, increase security, gain efficiency.
Speaking of efficiency, they also talked about changes to their go-to-market strategy.
They rolled out a specialization approach earlier this fiscal year, segmenting sales teams.
How so?
By platform, so core Okta versus Auth, but also, importantly, by buyer persona, selling differently to developers versus IT and security buyers.
That makes sense. Tailoring the message.
Right. And it's not totally new for them. They'd seen success with similar models in SMB and the public sector before, but applying it more broadly seems to be working. They mentioned encouraging signals, higher sales productivity, and hitting an all-time high in pipeline generation.
Good signs. And you mentioned the public sector. That continues to be a real bright spot for them.
Absolutely. A powerhouse, like you said. 5 of their top 10 deals in Q2 were U.S. public sector.
Including the biggest deal of the quarter?
Yep, with the Department of Defense agency. And it wasn't just a renewal. It was replacing an old legacy system with Okta Customer Identity. Big focus on meeting federal cybersecurity and zero trust mandates.
Zero trust, basically verify everything. Always.
Yeah.
Huge initiative in government.
Massive. And the strong renewals they're seeing elsewhere in federal, even with some restructuring at civilian agencies, just underlines how mission-critical Okta is seen in that space.
Okay, so if we zoom out a bit, how does Okta see itself in the broader competitive landscape, especially with recent consolidation like Palo Alto Networks potentially buying CyberArk?
Yeah, they addressed that. Management basically said they see these moves as validation proof that identity is central to security now, but they don't think it fundamentally changes the game for them.
They feel their position is unique.
That's the argument. They emphasized being the only modern, comprehensive, cloud-native solution that can secure every identity, employees, customers, non-human, AI agents, crucially, without vendor lock-in.
The independence play.
Exactly. That flexibility, that broad capability, they see it as a key differentiator. Customers want to consolidate identity vendors, sure, but maybe they don't want to be locked into one single security mega vendor for everything else. That neutrality is a powerful pitch.
Makes sense in a consolidating market.
Oh,
Okay, so
well.
let's bring this back to the investors listening. It's worth noting, Okta stock has actually lagged the main cybersecurity ETF, CIBR, and the S&P 500 over the past year.
It has, but these Q2 results and the outlook, they definitely suggest a potential turning point. It wasn't a huge surprise, maybe. Truist actually upgraded them to buy with a $125 target just before earnings.
Foreshadowing the positive sentiment.
And the broader industry trends are favorable, right? Cybersecurity spending is forecast to grow, what, around 12% CAGR over the next 5 years?
Something like that. And the risks from AI just keep intensifying,
Yeah,
which pushes things like identity and PAM higher up the priority list.
for sure. So near-term things to watch.
Yeah.
Q3 execution, obviously, keeping that public sector momentum going. How smoothly the Axiom Security integration goes.
And whether that cross-app access standard really gets traction with the ISVs.
Exactly. Real-world adoption is key there.
All right, let's shift gears now to our This Is Not Financial Advice segment. Time to pitch an outrageous but plausible trade idea, analyst style.
Okay, let's do it.
Given Okta's strong Q2, this whole strategic positioning around AI agent security with cross-app access, plus the Axiom acquisition boosting their PAM capabilities. Here's a thought.
We're calling it the AI agent security dominance trade.
The idea: go long Okta. Set a 12-month price target significantly above where the analysts are now, maybe pushing towards, say, $150 or even higher.
Ambitious, but here's the thesis. Axiom, while maybe small financially now, gives Okta that critical piece for securing non-human and AI identities at scale. Think of it as the special forces unit they needed for this next wave.
Especially in regulated sectors like government, where they just prove they can win big.
Exactly. And then you layer on the cross-app access standard. Combined with Okta's neutrality, it positions them to become the de facto control plane, the traffic cop, for all these AI agents interacting across different enterprise apps.
They're essentially building the critical infrastructure that everyone else will eventually need to plug into as AI becomes embedded everywhere.
Right, and we think this drives an accelerated land and expand motion. Companies adopt Okta for core identity, then expand into AI agent security, PAM, governance, especially in federal and large enterprises where AI adoption makes identity security totally non-negotiable.
It shifts from being a nice-to-have efficiency tool to a mission-critical must-have security spend.
Precisely. And that, we believe, drives faster CRPO growth than the market expects and leads to a significant re-rating of Okta's valuation multiple. They start being seen less as just an identity provider and more as a leader in the booming AI security market.
Allowing it to finally break out from that recent underperformance against the broader cybersecurity sector. They become the pure-play identity enabler for the AI age.
That's the pitch. Outrageous but plausible, right?
Plausible, definitely provocative. Okay, so let's wrap this up. To recap, Okta delivered a really robust Q2. Strong financials, raised guidance, and some key strategic moves, especially around AI security.
Yeah, the focus on that identity security fabric, the Axiom acquisition for PAM and this new cross-app access standard, it all points towards them aiming to be a central player in securing, well, the future of digital interactions, a future increasingly driven by AI.
As always, please remember, everything we've discussed here is purely for informational and educational purposes.
Definitely not financial advice. Please do your own research.
But we do encourage you to think about how these trends might reshape enterprise security. What does an identity-first approach really mean when you're trying to protect assets in the age of AI?
Can Okta truly become that indispensable security layer for autonomous agents? That's the big question we'll be watching.
Thanks for tuning in to Talk Tickers.